In 1944, a quiet meeting in Bretton Woods reshaped the future. Out of the ashes of World War II, one currency emerged as the bedrock of the global economy: the US dollar. For over 80 years, it's been the beating heart of global trade. But in 2025, that heartbeat is starting to stutter. Across continents, behind closed doors and firewalled servers, a silent revolution is brewing. Not with tanks or treaties, but with code, contracts, and gold. The challenge to American financial supremacy has already begun. The real question isn't if the dollar will fall. It's how quietly it will happen before the world catches on. In this video, we're diving into the rise of BRICS as a financial counterforce, how the US is deploying digital firepower to defend the dollar, and what all of this means for your money, your job, and the price of gas. Because this isn't just about economics, it's about who writes the rules of the future. For decades, the dollar wasn't just a currency, it was a passport to power. Oil? Priced in dollars. Gold? Dollar denominated. Loans, trade deals, sovereign reserves, all orbiting the greenback. But now that gravitational pull is weakening. Enter BRICS: Brazil, Russia, India, China, and South Africa. In 2025, they're no longer just a geopolitical acronym. They're an economic insurgency, and they're not alone anymore. With the addition of Iran, Egypt, and Saudi Arabia, BRICS has evolved into something much more formidable. In April 2025, they launched the BRICS Digital Currency Reserve, a new financial ecosystem backed not just by their own currencies, but by hard assets: oil, gold, and industrial metals. For the first time since Nixon scrapped the gold standard in 1971, the dollar faces a coordinated commodity-backed alternative. And here's where it gets personal. What happens when the dollar loses its monopoly? When your savings, your mortgage, your grocery bill are tied to a currency no longer backed by global consensus. When rules change, consequences trickle down. Naturally, the US isn't taking this lying down. In February, the Fed, in coordination with G7 central banks, accelerated the rollout of its digital dollar, a central bank digital currency aimed at boosting global transaction speed, transparency, and, let's be honest, surveillance. Treasury Secretary Scott Bessent took to the airwaves declaring, "The dollar remains the backbone of the global economy. That will not change on our watch." But inside boardrooms in Singapore, Johannesburg, and Sao Paulo, new ledgers are opening. America's allies are hedging their bets. Southeast Asian and African central banks are experimenting with BRICS settlement systems. France has quietly started settling Chinese LNG contracts in yuan. And the unthinkable happened when Saudi Arabia, the cornerstone of the petrodollar system, accepted BRICS tokens for crude oil. A symbolic defection, yes, but also a signal that loyalty to the dollar is no longer a given. Let this number sink in. As of March 2025, more than 38% of global energy transactions are settled in non-dollar currencies. 5 years ago, that number was 12%. This isn't a ripple, it's a wave. So why now? Why are countries suddenly willing to poke the bear? The answer goes back to the weaponization of finance. After Russia invaded Ukraine and China flexed over Taiwan, the US responded with unprecedented economic warfare. Sanctions, asset freezes, swift exclusions. Effective, yes. But it also revealed the Achilles heel of dollar dependency. When the dollar can be used to freeze your reserves or isolate your economy, it's no longer neutral, it becomes a weapon. And that realization drove rivals into alliance. To protect themselves, BRICS launched their own version of SWIFT in late 2024. Built on encrypted Indian software, hosted on servers in Shanghai, and designed to clear trades in commodities instead of fiat, it's still clunky, but growing fast. Argentina, Turkey, and even Indonesia are exploring integration, not because they hate the dollar, but because they fear it, or rather fear being cut off from it. It's not collapse we're witnessing, it's erosion. And erosion done right is quiet, strategic, irreversible. Still, America holds powerful cards. Wall Street is still the global financial casino. US treasuries remain the ultimate safe haven. And the Pentagon's global footprint gives the dollar an implicit shield. But there's a new factor: trust. And trust, once frayed, is hard to repair. In a leaked IMF report from April, Projections suggest that by 2030, the dollar's share of global reserves could fall below 45%. Today, it's 58%, not a collapse, but a slide. And in geopolitics, slides are just slow motion avalanches. Now let's add one more layer, artificial intelligence. Yes, it's already reshaping the battlefield. China's using blockchain-based AI to audit transactions in real time. The US is deploying deep learning systems to track suspicious flows, from Russian crypto laundromats to Venezuelan gold reroutes. It's no longer dollar versus BRICS, it's AI versus AI. Cyber currency wars are now a thing. If you're finding this breakdown helpful, tap that like button. It helps us reach more viewers who are trying to make sense of a very confusing financial future. So what does all this mean going forward? Well, the transition has already begun. European hedge funds are building BRICS risk into their models. African nations are issuing dual tenders, one in dollars, one in BRICS credits. Shipping giants are tweaking pricing models based on real-time currency risk dashboards. The old system is still here, but it's sharing oxygen with a younger, faster, and more unpredictable rival. And as the tectonic plates of global finance continue to grind beneath our feet, one question echoes louder than ever. If the dollar is no longer king, who takes the throne? Maybe no one. Or maybe the crown is shattered, recast into code and contracts, spread across continents instead of sitting on one imperial head. Because what we're witnessing isn't a coup, it's a decentralization. And in 2025, that means friction, fragmentation, and financial experimentation at a scale we've never seen before. Let's zoom in. It's a Tuesday morning in Nairobi. A logistics company is paying a Chinese port in BRICS tokens, settling in under 8 seconds. That same day in Frankfurt, a German energy firm settles an oil deal in digital rupees. Meanwhile, in Caracas, government officials debate whether to peg the bolivar to BRICS commodities instead of the dollar. These aren't isolated anomalies, they're proof points in a larger pattern. The monopoly of trust that once belonged to the dollar is splintering into a network of regional alternatives. And that's the real shift. It's not just economic, it's philosophical. For decades, trust in money meant trust in America, in the Fed, in treasury bonds, in the rule of law. But after years of geopolitical shocks, Afghanistan, Ukraine, Taiwan, January 6th, and now AI-driven financial warfare, many nations are quietly asking, what if that trust is no longer safe? In April 2025, a joint statement from the BRICS Plus finance ministers made global headlines. It read, quote, "A multipolar world requires a multipolar reserve structure. No single currency should dominate the fate of billions." It was a jab, not just at the dollar, but at the very concept of monetary centralization. And it's not just BRICS making moves. The European Central Bank has increased its non-dollar reserves by 11%. Japan's Mitsubishi UFJ is testing cross-border BRICS settlements for semiconductors. Even Australia, America's traditional ally, is now allowing certain mineral exports to be priced in yuan and rupees. You might be thinking, okay, but isn't this just economic posturing? It was, until markets started to believe it. In early April, the IMF published new reserve data. For the first time in modern history, emerging market central banks added more gold and BRICS-linked assets than US treasuries. Investors took notice, so did Washington. Behind closed doors, the National Security Council convened an emergency task force, codename Project Atlas. Its mandate: assess the national security risks of a weakened dollar and propose countermeasures by Q3. The implications are staggering. Think about it. If foreign demand for treasuries declines, the US faces higher borrowing costs. If sanctions lose bite, American foreign policy loses leverage. And if trade begins to settle in rival systems, US exporters could be at a disadvantage, pricing their goods in a currency fewer people want to hold. Here's a number to sit with. In 2020, over 80% of global trade was invoiced in dollars. By April 2025, that figure stands at 63%, still dominant, but fading fast. And it's not just the big players shifting course. Smaller nations, ones with fragile currencies and limited leverage, are hedging their bets. In Laos, officials are considering pegging their national currency to a BRICS basket instead of the greenback. In Kenya, mobile payment apps now let users choose between the dollar, BRICS credits, and stablecoins backed by gold. It's a quiet revolution, a happening one app update at a time. Now pause. This isn't just a war of currencies, it's a war of systems. The BRICS bloc has been building what some economists call shadow infrastructure, an entire financial parallel universe designed to minimize dollar exposure. Think about it. BRICS SWIFT alternatives, commodity exchanges, credit rating agencies, even their own development bank. In essence, they're creating an ecosystem that doesn't need the US. The most symbolic blow came in late March, when Brazil, China, and Russia finalized the first full-cycle energy contract, negotiated, signed, settled, and cleared without touching the dollar or the Western banking system. No correspondent banks, no SWIFT, just BRICS rails from start to finish. For Washington, this isn't just a loss of market share, it's a loss of visibility, because the dollar's dominance hasn't just been about trade, it's been about intelligence. Every dollar transaction leaves a trace, a data point, a pattern, and without that transparency, America flies a little blinder. So how is the US responding? 2 words: digital muscle. In February, the US Treasury unveiled a new initiative called Sentinel, a real-time analytics system that uses AI to monitor digital currency flows worldwide. Its goal: detect, predict, and intervene in illicit finance long before it hits Western shores. The system is already deployed in 26 partner countries. Simultaneously, the Fed's digital dollar pilot has expanded into 12 new states. Early tests show it can process 3 million transactions per second with under 2-second latency. That's not just fast. It's faster than Visa, MasterCard, and most crypto networks combined. But with power comes paranoia. Civil liberties groups have sounded the alarm, warning of unprecedented surveillance potential. If every transaction is traceable, what happens to financial privacy? Treasury Secretary Besson insists there will be safeguards. But as one think tank put it bluntly, the line between financial security and digital authoritarianism is vanishing. Meanwhile, AI isn't just analyzing flows, it's predicting political outcomes. A leaked RAND report this month revealed that both China and the US are deploying machine learning to model financial tipping points. For example, what happens to inflation if Saudi Arabia dumps 20% of its dollar reserves? What's the impact of a BRICS-aligned digital euro on Eastern Europe? These aren't academic questions anymore. They're actionable intelligence, and they're shaping policy in real time. Here's a chilling thought. In 2025, your currency is no longer just a medium of exchange. It's a proxy for alliances, a reflection of loyalty, and in some cases, a target. Earlier this year, a ransomware group believed to be linked to North Korean cyber units hit several US financial institutions. But instead of demanding Bitcoin, they asked for BRICS credits, transferred through anonymized smart contracts. It wasn't just about money, it was about making a point. Meanwhile, Russia has begun settling arms deals with Africa in a BRICS-backed stablecoin. China is experimenting with dual currency bonds in Latin America. And Saudi Arabia? They're now running side-by-side budget scenarios, one pegged to the dollar, the other to a BRICS commodities index. And yet the US isn't down for the count. America still controls 55% of global equity markets. Its tech sector still attracts over 70% of cross-border VC funding, and its military presence, spanning 750 bases across 80 countries, remains the ultimate guarantor of dollar dominance. But confidence is a funny thing. It doesn't collapse all at once. It erodes quietly, like sand slipping through fingers. And that erosion accelerates with every trade settled in yuan, every central bank adding gold, every oil deal priced outside the greenback. These aren't just financial decisions, they're political acts. One BRICS diplomat put it bluntly during a summit in Johannesburg: "We don't want to destroy the dollar, we just want options." And America's behavior made us realize we need them. So what's next? In part 3 of this video, we'll explore how the shifting financial map could reshape everyday life, from inflation shocks to supply chain redesigns, from the death of the petrodollar to the rise of AI-regulated credit scores. We'll dig into how this transition could hit your bank account, your investments, and even the job market you depend on. Because this isn't just a war of currencies, It's a war over control of the 21st century. If this breakdown has opened your eyes to the financial future we're walking into, hit that like button. It helps us reach more viewers who, like you, are trying to stay ahead of the curve. And ask yourself this: if the global financial system is being rewritten in real time, are you ready for what comes next? It starts quietly. A subtle change in your grocery receipt. The gas station now lists prices in both dollars and a strange symbol you don't recognize. Your bank app flashes a new feature, multi-currency wallet. The world is shifting, not with an explosion, but with a soft click. The BRICS reserve currency, once speculation, is now accepted from Sao Paulo to Italian ports. The IMF hasn't endorsed it, but markets adapt. Because when oil flows in BRICS currency, everyone follows. Now inflation responds to mining in South Africa, shipping in Mumbai, and oil in Iran. Your paycheck depends partly on a distant consortium. Gas prices no longer pegged to US benchmarks. The new standard, BRICS weighted indexes. This is currency drift. If you're paying for imports or vacations, those 10-15% bumps, that's dollar discounting. Job market split. BRICS-linked exports rise. Dollar-bound sectors, finance, logistics shrink. Even retirement is shaken. A 2025 report shows the dollar's reserve roll may drop 20% by 2032, adding $1.6 trillion in liabilities. US firms now bill in BRICS. Protests rise over the Fed's digital dollar. Confusion reigns. Meanwhile, BRICS tech and AI thrive. The shift is real. Financial hubs, insurance, and even Harvard's curriculum are pivoting, and yet many Americans still believe the dollar is safe. Until it's not. The system didn't collapse, it evolved. If the foundation beneath your economy changed, would you even notice? Subscribe for more insights into global affairs.